Hey everyone, and welcome. So today we are diving into a topic that feels, well, intentionally confusing, right? The US housing market. One headline says it's booming, the next says it's busting. So what we're going to do is cut right through all that noise and figure out what is really happening beyond those splashy headlines.
You've probably seen this, right? If you've been following the news at all, this looks super familiar. On one hand, you've got these screaming headlines about a market in total freefall. And then, on the other, you're hearing that prices just hit an all-time new peak. It's enough to give you whiplash. So, which is it? Who are you supposed to believe?
And that leads us to the big question, doesn't it? What is actually going on? To really answer that, we have to kind of forget the national soundbites for a minute and start looking at the market in a totally different way.
And that new way of thinking starts right here. Section 1, understanding the huge, massive difference between what you see on the national news and the reality in your own neighborhood. Honestly, this is the single most important idea to get your head around.
Look, if you remember only one thing from our chat today, please make it this. The housing market is highly localized. It just means that what's happening in, say, Phoenix has almost zero to do with what's going on in Seattle or Boston or Des Moines. Real estate isn't one big national story. It's thousands and thousands of tiny local ones happening block by block.
You know, this is probably the best way to think about it. Hearing about the national housing market is a lot like hearing about the average U.S. weather. I mean, yeah, that number exists somewhere, but it is totally and completely useless for deciding if you need a jacket in your city today. For that, you need the local forecast, right? Same thing here.
And this just illustrates the point perfectly. Just look at these two made-up but totally realistic markets. Over in Sunnyside, Arizona, demand is still strong. Prices are actually climbing, and houses are selling in like 2 weeks. But at the exact same time, up in Fog Harbor, Washington, demand is cooling off, prices are ticking down, and it's taking a month and a half to sell a place. See? Both are part of the same national market, but their realities could not be more different.
Okay, so knowing it's all local, that's step 1. But that kind of brings up another question, right? If it's all local, why do the national headlines seem to get it so wrong all the time? So in this next section, we're going to decode the signals and really understand why the information we get is so often confusing or, just plain late.
A huge, huge part of all this confusion comes down to this one simple concept: data lag. All it means is that the sales data that makes headlines today isn't about what's happening now. It's actually reflecting deals that were struck weeks, sometimes even a couple of months ago. This timeline shows you exactly why that is. A buyer and seller agree on a price, that's step 1. But then you've got this 30, maybe even 60-day closing period before the sale is even official. After that, the sale has to be recorded and then compiled into those big reports that journalists use. So by the time you're reading about it, the market might have already shifted again. You're basically always looking in the rearview mirror.
So what's a smarter way to look at things? Well, you want to focus on these real-time indicators instead. Are mortgage rates ticking up or down this week? Are more sellers in your specific town dropping their prices? Are a whole bunch of new houses suddenly hitting the market? These things tell you what's happening right now, not what happened 2 months ago.
And of all those indicators, mortgage rates are king. It all comes down to this really simple, unbreakable rule. When interest rates go up, a buyer's purchasing power goes down, period. A higher rate means a higher monthly payment, which means the bank approves you for a smaller loan. It is the market's most powerful lever for sure.
And all this feeds into the bigger picture of affordability. This chart, as simple as it is, really visualizes a huge challenge in a lot of the country: the gap between what the average person earns and what the average house costs. When this gap gets too wide, it basically acts like a natural brake on the whole market, because fewer and fewer people can actually afford to buy.
Which brings us to the big, dramatic question everyone wants to ask. Are we headed for a crash? In this next section, we're going to reframe that question completely and explore whether it's actually a crash or maybe just a cool down.
The media loves drama. We all know that. And that feeds this myth that housing markets only have 2 speeds: boom or bust. But the reality is that markets are these complex systems. They don't just explode or implode. They very often adjust and correct and stabilize in much more gradual, kind of boring ways.
And there's a much better term for what we're probably seeing in a lot of areas: market normalization. It's not a crash. It's just an adjustment. It's the market getting back to a more balanced, sustainable pace after years of just frantic, crazy activity. You could say it's the market just catching its breath.
So what does this normalization actually look like on the street? Well, you see fewer sales happening overall. Prices start to flatten out instead of spiking every month. You see more homes pop up for sale, which gives buyers actual choices for a change. And yeah, those homes might sit on the market for a little bit longer. These aren't signs of a disaster, they are signs of a return to balance.
Okay, so we've broken down the what and the why. But what do you actually do with all this information? In our final section here, we're going to turn all these concepts into a practical guide for you to make your smartest move.
And we're bringing it all home with this key piece of advice. Real power comes when you shift your focus away from those national, sensational headlines and you put it onto the data that actually matters to your personal situation. This right here, this is the data that matters. Forget the national trends for a second and focus on your fundamentals. What's happening in the specific neighborhood you want to live in? What will your total cost of owning a home be? I'm talking taxes, insurance, maintenance, the whole shebang. How long do you plan to stay there? And the most important question of all, what does your own personal budget allow? That's the only data that truly counts. So I'll just leave you with this one last question. The goal isn't to perfectly time the market or to react to every single breaking news alert. The real goal is to build a plan that's based on your own life and your own finances. Because when you do that, you're not at the mercy of the headlines anymore. You're in control of your own decision. Thanks so much for tuning in.